Suzuki Motor Corp is reportedly looking to buy more than 50% of Proton holdings. The move would turn Proton into the Japanese car maker's subsidiary. According to a news report, Proton's executives have already visited Japan to discuss the matter. The report adds that Proton is expected to make a decision by March next year, quoting a source close to the matter. Suzuki is one of 5 names that are being bandied about as Proton's potential strategic partner. The other 4 are Geely, Volkswagen Škoda Unit, Renault and PSA Group. The Attorney General's office says that it has yet to receive any request for additional assistance from Switzerland in probing State Fund 1MDB. Regardless, the AG office affirmed its commitment to international cooperation and said that it would appropriately consider the request once received through diplomatic channels. Yesterday, the Swiss AG said that it suspected a Ponzi scheme had been used to conceal substantial amounts of misappropriated funds. This is the second time this year that the Swiss authorities have asked for assistance relating to a probe on 1MDB. HSBC Global Research is expecting Bank Negara to make another cut to the OPR in November, with loan growth at multi-lows. Economist Lim Susian says the central bank will likely trim the key rate by another 25 basis points to 2.75%. She says there is a pressing need for Bank Negara to deliver meaningful policy accommodation. However, she feels that the scope for easing beyond that is limited, particularly given the expectation that the US Fed will raise its funds target rate in mid-2017. Plus, overly aggressive rate cuts could mean risking capital outflows, which is all the more pertinent because of the thin current account surplus. UOB Asset Management Malaysia Berhad believes that the local stock market will stage a better performance in the next 12 to 18 months. Its Chief Investment Officer Francis Ng says investors may see higher stock market returns in line with improving consumer sentiment. He notes the Consumer Sentiment Index has started to adjust the GST, the weaker ringgit and other negative sentiments. Oil demand is also expected to pick up, while the construction sector is also a sweet spot for the benchmark composite with ongoing projects such as the new MRT and LRT lines and the Pan-Borneo Highway project. As for the ringgit, Ng expects the currency to trade at around 4.15 against the US dollar by the end of this year. LPI Capital Berhad saw its third quarter net profit rise a marginal 2.5% on the back of profit growth in its general insurance business. Earnings inch up to 77.8 million ringgit from almost 76 million a year ago. Revenue increased by 4% to 363.5 million ringgit thanks to higher earned premium income. Going forward, Chairman Tan Sri Teh Hong Piao sees a very challenging outlook for the general insurance industry due to weak consumer demand and the liberalisation of motor and fire insurance tariffs. Nevertheless, Teh says LPI Capital will leverage on strong balance sheet and sound capital position to strengthen its market position in targeted portfolios.